All right, people. So let's have a little talk about interest rates, okay? Are they robbing you?
Trying to rob me.
Or are you just giving the money all away? We are going to go to bankrate.com. That's my favorite website for mortgage calculators, for looking at the amortization schedules, and all that good stuff, okay? Checking interest rates, all that. So we're going to go to Bankrate. I'm going to share my screen with you guys so you can actually see what's going on with interest rates when you get these loans and how much you're actually paying once things are said and done, right? After those 30 years, 15 years, however many years you decide to finance this property, how much are you actually paying? All right, remember, so are they robbing you or are you giving the money away? Check it out. Let me give you all a little disclaimer. I am not a financial expert. I am not a financial advisor. I am not licensed to give you financial advice whatsoever. So don't go tell nobody that I told you to do anything. I'm just giving you the information, all right? Back to what we got going on. Okay, so we are on bankrate.com and we're looking at the mortgage calculator. This is really good, especially for you all that's trying to purchase a home in the near future. You can just play with this, put some numbers in and see what you're going to be looking at. So remember, this does not include your HOA fees, your homeowner's insurance, and your taxes. Bankrate doesn't know where you live, so they're not going to be very accurate when it comes to those things. So let's just look at principal and interest right now. Okay, so let's keep the home price at $325,000. And we're going to put this down payment at 20%. Now, I do know that it's not ideal for most people to pay 20% or put 20% down. That's usually for someone that's purchasing their second home. They've already built equity in the first one, or just someone that has a very high income, more than average income, that can afford that kind of thing. But I still want you all to see the difference in the numbers with 20% down. Okay, so we're going to keep the loan term at 30, and we're going to have this interest rate at about 6.5. Okay, we're not going to worry about the zip code. So we update it, and it looks like it's already updated. So that monthly payment is $1,923. Okay, but that's not the big deal. The big deal is the total interest paid right here. So it's at $331,897. So over 30 years, you're paying that much extra for this home here. Now remember, the loan amount was $260,000. Okay, and the total cost of this loan, when you add those together, is $591,897. All right. To me, that's a big deal, but I understand that we're all not walking around with $500,000, $1 million in cash that we can pay in homes. So most of us have to go about it this way, but we still need to at least think about what we're doing and have some kind of strategy on how we do it. So let's go back up. Okay, let's go back up and change some things. Okay, we're gonna keep that at $325,000. All right, but we're gonna change this down payment. All right, let's change this down payment to 0, no down payment. So we're talking about VA loans, USDA loans. Okay, no down payment. All right, we're gonna keep this interest rate at 6.5, and we're gonna keep the loan term at 30 years. Now let's update this. What do we get? Now you see how the monthly payment jumped? That monthly payment jumped $2,334. Okay. So that's an extra $300 right there. All right. So actually, it's an extra $400. It's extra $400. So, but look at this total interest paid right here. It's at $414,685. Y'all. All right. You see how big of a difference that is? It's about an $80,000 difference, and I didn't use a calculator, so I'm just going off the top. But that's a big difference, all because you didn't put this down payment. You're 20% down. This is how much extra you're paying in interest, and look at that total cost of the loan. All right, $325,000, no money down, 30-year loan term, 6.5 interest rate. I'm not gonna worry about that zip code. All right, so back to where we were. Now I want to show people that want to roll their closing costs into their loan, the difference they're paying in interest rate. So let's go to the amortization. so total interest paid. All right, we see that $414,685. Okay, so now let's go up here. Closing costs is generally 35%. We're gonna do 3% because that's easier for me to calculate this in my head. So see, 1% would be 3,250. That's about $9,750 that you'd be paying in closing costs. So let's add that to this 325. Okay, so that'll be 325, 334, 750. All right, let's bring that to 0. 30 years, 6.5% interest rate, and let's update this. All right, so look at the total interest paid. All right, so that changes to $427,588. Okay, so let's compare that to the $414,685. And so basically, you saved yourself on the front end about $9,000, right? $9,700. So essentially, you gave them about $15,000 extra dollars, so you could save your $9,750 up front. And if you have a strategy for something like that, that's totally fine. But if you're just going to spend the extra money that you have on things that's not going to return you anything, then you pretty much just lost. And all right, so y'all saw it. That's just me giving y'all the basics on how to deal with interest rates and how to deal with your finances when it comes to buying a home or financing anything for that matter. So if you're asking the question, should I keep some money in my pocket right now and pay them more later, or should I just go ahead and let that money go? That way, at the end of the day, I'm not paying as much in interest. I'm not giving away money, and I'm not letting them rob me. Okay, so once again, I'm not giving you advice. I'm just showing you what you can do to make things better for yourself. And for my clients, me knowing the basics of that kind of thing, it helps because it's really good when it comes to negotiations. I know if my client wants to save a little bit of money, then I can just keep money in their pocket right now. I can negotiate in that way. I can let them know that they'll be paying a little bit more later, but right now they need liquid so they can either move, buy furniture, buy the kids some clothes, whatever they want to do, right? And if I have a client that they're very good liquid, I know that they can go ahead and pay right now, so they won't have to pay so much more in interest later. But that's this video, y'all. Check me out on the next one.